So Tyler, Plug Power stock continues to skyrocket. And in fairness, they've shown progress with some things with their business. Revenues growing again. They're delivering electrolyzers. They say they've gotten production up to record levels at their Georgia green hydrogen facility. Another company in the space that I've actually owned before has done really, really well recently. That's Bloom Energy. And we're going to compare Bloom and Plug a little bit, talk about both, talk about some differences in their business, and just do a summary of the two. And then at the end, offer up some ideas about where we think investors should invest, if at all, in this space. You ready to go?
Jason, I feel like Rip Van Winkle. I just looked at Bloom Energy's stock chart. It is up 700% over the past year. Apparently was not paying attention because this is getting a lot more investor attention than I realized.
Yeah, Bloom's almost a four bagger just this year. And Plug, despite being down a ton earlier this year from the beginning of the year, is up almost double. The stocks are definitely up. And there's some green shoots too with the business, but some of the long-term issues are still there. We'll talk about it. This is Investing Unscripted. I'm Jason. That's Tyler. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. We get to make these videos because of our partnership with The Motley Fool. So go to fool.com/unscripted. You can get a lot of great stock ideas. You can get access to The Motley Fool's 10 best stocks to buy right now. Go check it out. It's worth taking the time to do that. Hey, Tyler, a picture tells 1,000 words. Here's the stock performance. This is just so far this year. The purple is Bloom. The orange is Plug. Over the past 12 months, like you said, up a lot. And it's really only in the past few months that Plug Power stock has ripped because the company went through a really, really tough time over the summer. Frankly, insolvency is the word that was being tossed around. And as much as the stock is up, there's still questions, right, about the business. But let's talk a little bit about what's going on with Plug first, and then I'll talk a little bit about Bloom, and then we'll share our conclusions at the end.
Well, I think for background for a little bit of both, I think a lot, aside from general, we call it animal spirits, investor enthusiasm for every, for a lot of things these days, especially
And it's
anything
vibes, right? There's vibes that are driving these stocks right now. Let's just put
So
that out there. This is not just business performance.
No, and the vibes have a lot to do with this idea of AI and the need to power everything.
Yeah,
Because the numbers that are getting put out there for how much power generation we're going to need for AI compute, AI inference, AI storage are mind-boggling.
Yeah.
We're talking like adding multiple percentage points to the current US power production just to make it happen. And with that much happening this quickly, we're going to need electrons. And to make that happen, companies are looking everywhere, including hydrogen. And I think that's a big reason why a lot of people are excited about these companies again, because we've gone from a period of maybe, replace older existing power fleets to, oh my goodness, where the heck are we going to get all this power? And I think that's where
right. We can't replace them. We need to keep them up and running while we're adding more.
Yeah. And that's the background, I think, for a lot of what we're seeing with Plug Power and Bloom Energy. I would tend to say more so with Bloom Energy based on the offerings that they have. But, I think for Plug Power, they have been announcing a lot of cost efficiency programs, trying to cut costs out. They are, like you said, growing. They're actually delivering product, which has been a challenge for them. We've talked on many videos previously, lots of inventory build, a lot of, not turning stuff into cash, but it's starting to, alleviate a little bit here. They're going to report earnings within the next couple of weeks, and we'll see how much that changes. But certainly investors seem to be thinking, or traders, or whoever's buying this stock seems to be thinking that things are going to get better here after a period, which, we've said multiple times, like they were on the brink of insolvency, and even said so in their SEC's disclosures.
When it reports earnings for its third quarter closer to the end of October, we're going to find out if what Andy Marsh and his management team have been telling us and their CFO have been saying, that the green hydrogen facility is going to drive their costs down because they've got to cut costs, if that's actually happening, right? We're going to find out if that's been the case. But I mean, some of the positives, I shared this in a video I did last week. I'm just going to bring this one up again. They are in this race, Tyler. They delivered the first electrolyzer to a refinery in Portugal that's looking to reduce its carbon footprint. So they've delivered basically 10% of the 100 megawatts that it's part of the initial thing that's happening at the refinery there. So that's a start. They've talked about uptime at that Georgia green hydrogen facility. Those are good things. Companies are buying their stuff, right? they're getting their green hydrogen production up so they can start having to not buy hydrogen on the open market at very high prices that is just destroying their margins. What we don't know, right? And I want to highlight this is like the big thing for Plug. We don't know how much that green hydrogen facility is going to reduce their cost for hydrogen. That's a massive cost of goods sold for them for serving the agreements that they have with customers. So that's a big thing that I'm looking for when they report earnings. Now, let's talk about Bloom a little bit. So Bloom, definitely less well known for a lot of investors. Plug Power's kind of like sucked the air out of that room for a decade and a half at this point. But Bloom is the bigger company, right? It's a more recent public company. It's been around for a while. Neither of these are new companies, right? They're decades old. But Bloom is the bigger company, larger on an international basis than Plug. Plug's kind of core business started in the US, basically powering forklifts. Bloom Energy does some similar things, but I think they're probably a little bit ahead when it comes to like remote power and using hydrogen as an energy source for more like utility scale applications. They're also a first mover in maritime applications, so hydrogen on these large container ships and other large ocean going vessels to reduce the carbon footprint of shipping. So that's Bloom's business. Do you have anything else to really add about Bloom?
Well, I would say, technically hydrogen, but they're a little bit more like fuel agnostic. The particular type of fuel cell that they use can use hydrogen. It can also use natural gas. You can
Right.
feed it a lot of source products to actually turn into power. And that's kind of been a benefit for them. With backup power, you can get from multiple sources. So if you have natural gas, you can get natural gas because it's cheap. If you want to go with hydrogen because you want, emissions free, then great, go for it. The thing that impresses me more than anything else is this is a business that's actually generating profitability. And so if we're talking about the two of them, you have a business here that, yeah, it's only what is it? Over the past 12 months, it's generated a 1 or 10 cents per share. But hey, 10 cents per share is a lot more than zero. And I think this is a business that seems to be accelerating in terms of margins. It's taking on a lot more orders. Again, backup power in, solving the
Yep.
intermittent power problem. There's a lot of things that Bloom Energy is doing that I think people who have been looking into the hydrogen market have this is what they were looking for, is somebody that can actually translate this into a legitimate business. Bloom has been the one I think that is going to make it happen just based on the markets that they're penetrating and the way in which they're going at it.
Yeah, I think that's right. If one of the things that they were smart at with the technology they've developed is having specific markets and applications where there's been demand long before AI has become the thing that it is today that's driving demand. But like if you look at South Korea, it has only enemies and adversaries to its north, doesn't have many native resources, and it's challenging to get energy into it. So energy is a national defense issue for South Korea. So they were one of the early providers to utilities and working closely with the energy industry in South Korea to help it start having the ability to have its own energy with storing hydrogen that's produced from renewable sources like wind and solar, storing that hydrogen and then using it when you need it to offset grid demand and that sort of thing. But as Tyler said, like the growth, if you look at the growth of the two businesses going back to, roughly 2016, when they were similar size, now Bloom Energy is well over double. It's closer to 3 times the size in terms of revenue is Plug Power. And of course, there was been a little bit of a tough period when interest rates started to skyrocket, but growth has returned for both. But again, Bloom is the one that's certainly grown the most. And I think here's the important thing. This is Tyler. This is something you and I've talked about with Plug Power and that we pointed out as a big risk for investors with Plug Power is cash flows. And if you go, this only goes back 10 years. We can go all the way back in time with Plug to the beginning of its existence back in the late 1990s. You see that gray line, it has never generated positive operating cash flow ever, like a single time. Now, more recently over the past 5 years, the industry has been spending a tremendous amount of money to stand up manufacturing capacity and expanding not just manufacturing capacity but also their ability to store hydrogen and produce hydrogen and not just manufacturing the hardware that they sell. But what we've seen is that Bloom's business has quickly never was burning the kind of cash that Plugs is, and is back to generating positive cash flow and also generating a little bit of free cash flow as well, right? So it's actually, even after spending on CapEx, has had a little bit of cash left in each of the past few quarters. That is a massive, massive step forward. Between the two, to me, Bloom has always stood apart from Plug as being the business that the unit economics work. Management has done a better job of scaling within the resources of the business's own cash flows. course, using debt, using share issuance, those things as tools to generate capital as needed. But you see that again, the scalability of the business is certainly better. So thinking about Bloom or Plug, are either these, I know where you stand on Plug. I'm not even going to ask you to mention Tyler. Neither of us think Plug is investable at this point because they've never proven the ability to generate enough cash from the operations to cover the cost of operating the business. And until they show us something like that, neither of us are going to be interested in it. Now, looking at Bloom, is there anything there that strikes your fancy?
From the business perspective, yeah, it's proven out to be profitable and it's growing. Top line 20%, margins are expanding. There's a lot to, from a business perspective, there's a lot to like. After this 700% run up, we have a stock now that's trading for, oh, I don't know, 800 times earnings and 100 times forward earnings. That's
Yeah.
just a lot of money. And so, at least from my perspective, yeah, I think something to keep an eye on. Perhaps the vibes of the market shift and things don't look as great. It might be a time to reconsider. But from right now, it's just kind of a watch list stock in the hopes that valuation will be come back to a more reasonable time to actually buy shares.
Yeah, I think that's fair. It's 21 billion enterprise value right now, so it's extremely expensive company, not just for what it's doing today, but also for what its long-term prospects are. I think that's just too pricey of a price to pay. Traders traders out there, you're doing well. That's fine. That's not our game. As long-term investors, I think both are interesting to follow for different reasons. But I agree with you. Between the two, Bloom is certainly the business that's more compelling, but neither at these valuations and with Plug, the quality of their operations, I think are worth it for investors. There's a lot of great businesses out there. We do a lot of videos talking about risky businesses that we like QuantumScape. Look at our channel. You can find some other videos for other ideas that we like. It's not the risk, it's the business profile. So I think that's the key thing to remember. Check out that link, fool.com/unscripted. There's a lot of great stock ideas on the Fool's 10 best stocks to buy right now list. Go check it out.